Welcome to The Explainer. All right, today we're digging into something that could completely change the game for your credit card, a proposal to slash interest rates down to just 10%. Now that sounds amazing for millions of people, right? But the real question is, could it actually happen? Let's break it down.
So this whole debate kicked off with a social media post from former President Trump. He said he's calling for a 1-year 10% cap on credit card interest rates. And pay close attention to that phrasing, calling for, because it's really important. It's a powerful suggestion, for sure, but it is not a policy.
Which, of course, brings us to the million-dollar question. Is this a serious plan to bring some real financial relief to people, or is it more of a savvy political move? To really get why a proposal like this is such a big deal, you first have to understand the sheer scale of credit card debt here in the US. And believe me, the numbers are absolutely staggering. As a country, we're carrying more credit card debt than at any other time in history. Right now, that grand total has blown past a record-breaking $1.2 trillion. Just let that sink in. And this is the number that really stings. For about half of all American cardholders, the ones who carry a balance from 1 month to the next, the average annual percentage rate, the APR, is hovering at a painful 22%. Okay, so let's do the math. What would happen if you took that 22% average and chopped it all the way down to 10%? The savings would be massive. We're talking about an estimated $144 billion a year that would go right back into the pockets of American families.
Okay, so the savings are huge, but, and this is a big but, could a proposal like this actually become law? Let's take a look at the very real political and legal roadblocks it would have to get past.
The first thing a lot of people wonder is, can't the president just, sign something and make this happen on his own? Can an executive order put this cap into effect? Well, the short answer, according to basically all legal experts, is nope, not a chance. A president could certainly sign an order like that, but it wouldn't be legally enforceable. The banks would challenge it in court immediately, and they would almost certainly win, because regulating private interest rates requires an actual law passed by Congress.
So if an executive order is out, what's the real path to making this a law? Well, it's pretty much what you learned back in school. A bill has to be introduced in Congress, it has to be passed by both the House and the Senate, and only then could a president sign it into law.
And here's the thing, this idea is not new, not by a long shot. As you can see, we've had similar proposals from both Representative Ocasio-Cortez and Senator Bernie Sanders. But even with that kind of high-profile support, none of them managed to get enough traction in Congress to become law.
But this time might have a different feel to it. The idea is actually getting some bipartisan attention. Republican Senator Roger Marshall confirmed he's actually talked about this plan with Trump, and he framed it as a way to lower costs and, in his words, rein in greedy credit card companies.
Okay, but as they say, every action has a reaction. So while the goal is obviously to help consumers, the banking industry is warning that there could be some pretty serious, unintended consequences if a cap like this ever came to pass.
The Bank Policy Institute, which, represents the big banks, put out a statement basically saying, hey, we share the goal, but the result would actually be less access to credit. They argue it could be devastating for the very people it's supposed to help.
And this right here, this is the heart of the whole argument, isn't it? On one side, you've got this incredible potential for savings for people struggling with debt. But on the other, you've got the very real risk that banks could just turn around and stop lending to those same people. I mean, think about it. If you're a bank and that $144 billion in interest revenue just disappears overnight, what do? Well, you'd probably look for other ways to make money. That could mean goodbye to rewards programs, hello to higher annual fees, making it way harder to even get a card, or maybe even lowering your credit limit or canceling your card altogether if you're seen as a risk.
It's a really important thing to remember about your credit card rewards. Your cashback, your travel points, all that good stuff. It's not paid for by Visa or MasterCard. It comes directly from the issuing bank, like Chase or Citibank, and it's funded by the profits they make. So if those profits suddenly get squeezed by a rate cap, you can bet rewards are going to be one of the first things on the chopping block.
All right, so we've looked at the potential benefits, the political hurdles, and the possible downsides. So what's the bottom line here? What does all this mean for you? Look, if there's one thing to take away from all this, it's this. For now, the 10% cap is just an idea. It's a concept, not a policy. And it faces the exact same huge legislative challenges that have stopped every other similar proposal from ever becoming a federal law.
And so we're right back where we started, with that big question. Is this the beginning of a real plan for financial relief, or is it a really powerful political statement? As of right now, it's just talk. But it is a conversation that could have a massive, massive impact on your wallet.